Massive news. Analysts says JPMorgan Chase & Co. have lowered their price target for the Bitcoin from $150,000 to $38,000. And they believe that this is a fair value for the Bitcoin. How are these news going to affect the market? Welcome back to the channel. If you're new, make sure you subscribe and like this video and share it with others. I think these news are very important to be shared because the US investment bank JPMorgan Chase & Co. are making a price target for Bitcoin. And this evaluation of the crypto coin, which is probably affecting everything in the crypto market, basically everything that happens with the Bitcoin, it's like an echo in everything that happens with the other coins in the market. These are just some analysis. Don't take it as being financial advice. Don't take it as being an advice of any type from me or from them. You're probably asking who JPMorgan Chase & Co. are. They are a leading global financial service firm with assets on over 2.6 trillion operating worldwide. They are leaders in investment banking, financial services for small businesses, very important commercial banking, financial transactions processing, and asset management. But what is the difference between JPMorgan and JPMorgan Chase & Co? The JPMorgan is mostly used by private banking and investment banking. And obviously JPMorgan Chase, as I said earlier, is more used for commercial banking and retail banking, mostly in the US. These are very important players in stock market and obviously now in crypto market. And sometimes their analysis are good analysis, but not necessarily talking about how good they are. But sometimes they flag up bits that happen in the market and when things tend to drop or grow. What is the article actually saying? I'm going to leave a link down below if you want to read the whole article, but I want to pick up on a few things. The article shows what the analysis led by Nikolaos, and I'm not going to pronounce his surname, think about the fair value for the Bitcoin, and why they think that Bitcoin did not have a first good value by JPMorgan when they raised the price target to $150,000. All their analyses are based on volatility and how the volatility affects the price targets and why they think that that volatility that we see in crypto is not going to get anywhere close to the gold. And they compare with gold, obviously, because it's an asset that you can buy. And the gold volatility, if we are going to look in a second, is so stable. And they think if the Bitcoin is going to be an asset that is worth buying and holding for a long time, then it needs to get at least to some sort of volatility like gold. They believe that if this volatility will narrow at least 3 times, they're going to see an estimate of the target to $50,000 for the Bitcoin. And I'm quoting what they're saying. The biggest challenge for Bitcoin going forward is its volatility and the boom and bust cycles that hinder further institutional adoption. The strategists wrote in the message. For Bitcoin to become something even more stable, you want all the institutions to adopt it. You want institutions to start trading and more institutions start trading and holding Bitcoins, not necessarily just the retail, the commercial bit, us. You want institutions with huge growth, with a lot of history to hold Bitcoin for it to become a good asset and not be scared that Bitcoin and all the other cryptocurrencies are a bubble that is going to burst in future. What actually volatility is and why is this affecting the price targets for different assets, stocks, and in this instance Bitcoin? Volatility is the measure of how much the price fluctuates, the price of a coin, in this instance Bitcoin, on a day relative to its price. Who's measuring the volatility? CVI tracks the volatility in the market for crypto, and obviously probably you've heard about VXI, which are measuring the volatility for the stock market. I'm going to pull out the VIX indexes and look at the volatility. I'm going to choose the Bitcoin and probably some of the most traded stocks just to see and how they compare. I'm going to look at Bitcoin and Apple and let's look at Tesla, let's look at Nvidia, let's put in the Nasdaq, let's put in the Amazon, and let's put the gold. You can see how the gold looks like. The gold is the more straight line, And this is something that you expect when it comes to assets. You want a very nice horizontal line. You don't want to see too much volatility for that asset to gain in price. You can see the volatility on all the other assets, but mostly you can see it in the Bitcoin and USD transactions. I've added Tesla and Nvidia because I wanted you to see what volatility does to different stocks and why they think that probably Bitcoin is something which is very well impacted by volatility. Nvidia is one of the top stocks traded this year, and it fluctuates so much because their contracts and how Nvidia are going to impact the market moving forward in the semiconductor world, and then becoming probably the US biggest company in semiconductors, and how that company gains so much interest. And obviously traders, they want volatility. You want to ensure that whatever you buy is volatile, so then you can buy low and sell high. Obviously it's very hard to predict because all of us will be billionaires if we could predict when things go low and when things go high, so we can sell when the time is right. But that's very hard. But obviously Tesla is another one, and you can see it on the chart. Tesla is similar with Nvidia, and they're very volatile, reason why they're probably one of the most traded tickers at this point. But then we can see the huge volatility in the Bitcoin, and you want Bitcoin, which is compared with gold, to have a nice horizontal volatility. You don't want it to have too much ups and downs, because that's not going to make the asset worth anything probably. Let's put it against the gold and see how it looks like. Ignore the index there and just have a look and try to compare the chart on Bitcoin against gold. I'm not sure how much they compare and why exactly JPMORGAN wants to compare with gold. But also let's have a look at how the volatility is actually impacting the price targets, and not necessarily the price targets, but the prices of these tickers. I'm using Google Finance to compare some of these bits, and you can go yourself on Google Finance and compare different stocks, different tickers. Again, you can see how flat the gold is. And again, this is probably not something very good for traders. But when there's fear about recession, probably gold is the best asset to invest in, and something in which we can keep your money or your savings, because obviously not being very volatile, the price tends to stay the same or just slightly trending up over the years. You can see the stocks that I've used being volatile. Obviously, they are very good opportunities for trading, and as well with Bitcoin. But Bitcoin not being as stable and being still very volatile, and the fear of the big bubble bursting, it's obviously making the price to drop dramatically. I'm not an oracle on knowing how volatility is actually going to impact the price of Bitcoin. I still believe in crypto. I still believe that cryptocurrencies are the currencies for the future, and I think the transparency in the transactions and how the blockchains actually work is what we should adopt as being currencies for transactions, and especially transactions online. I would like to know your opinion on it. What is your take on these news? Do you think this is a good price prediction? I would love to hear your opinions in the comments section, and let's discuss this and probably share some facts if you think that the price is not as it should be, and let's talk more about it in a different episode. Thank you very much for being here. Make sure you subscribe, make sure you hit that like button. Until next time, stay safe.